What is up YouTube? Welcome back to the AlphaFX Academy. So today I'm here to deliver another quality analysis and forecast, but focusing more on the forecast side because it's the end of the month and there's only 2 days left from September, and also a new quarter is coming up, so we have some exciting things to look out. If you're interested in the newest forecast on the gold USD spot market, stay tuned, it's coming. Right, last week's analysis and forecast, guys, was absolutely bang on. If you watch my videos and if you follow me, you should remember that I posted a video forecasting the drop from 1787 all the way to 1738. And if I just delete this, you can see that the forecast was from this top wick all the way down to this bottom wick. So the forecast was absolutely bang on. We made over 500 pips, and I received so many messages from you guys, which was I was really overwhelmed with the messages saying how awesome this trade was, and actually I was lucky and happy that you made profit. So it was a really good feeling that this analysis worked out exactly to the pip. And we all made 500 pips, which is an amazing result. So 500 pips should make your whole month in one trade. But enough of the past now, and let's focus on the forecast and analysis. I'm going to tell you exactly what you should expect on the gold USD spot market this week. Remember, guys, that this week, or today, it's Wednesday, is the end of the month. So we have one more day tomorrow and also the end of the quarter. So what I'm expecting is so many trading firms and so many traders are going to close down their profit and loss accounts. They're going to close down their positions in order to be able to account the profit and loss calculations in the quarterly reports. Because if they have any open positions, that means the accountants cannot book it as profit nor loss because it's currently a floating or an active position, so you cannot account it in the books. For this reason, many of the firms and many of the traders are forced to close down the positions, and usually at the end of the month and end of the quarter you see these big moves which you cannot really explain why did it happen. So gold start a whiplash, and that's exactly the reason, because the traders and the firms, they obliged to close down all of these positions. So what you should focus on gold today. But again, once again, be careful, guys, because at the end of the month price can make some really silly moves. So the first thing we know is that gold is still in a bearish direction. We had this breakout from this bearish channel, and price found support earlier than I expected, because I thought price is going to go down to 1723 and even a little bit lower, but it looks like it found support at 1729. And we have this bearish flag pattern, which means gold is still in a bearish market direction. So the next thing you have to do, guys, get your Fibonacci, place it from swing high to swing low, and ask yourself, what do you see on the chart? Where would you enter into another sell position? Definitely not right now, because as you can see, and gold always does after a big impulse move, is followed by a retracement. So what you see on the chart now is the retracement which is happening right now. And usually gold retraces, or any currency pair retraces to known levels, and that's why you use the Fibonacci retracement, because it retraces either to the 61.80 right here or the 78.60. Now, which one do you think has the highest potential for gold to retrace? My bet would be on just in between the 78.60 and 61.80, and it will be at the bottom at this wick. So let me just delete a few things. I'm going to explain why I think that price is going to touch 1747 before it drops. So if you go to the 4-hour chart, you can see that there is an imbalance between these candles. So the bottom of this wick, this is where the buyers had the lowest interest, and this is where the sellers had the highest price they're willing to sell. And in between you can see that there is a gap, which means there is an imbalance on the market, which means the price has to fill up this gap right here. And if you use the Fibonacci again, that level lines up exactly, well, almost with, you know, in between the 78.60 and the 61.80. So this morning I sent out an analysis to the VIP members, and the price was just around 1737. So if I go down to a lower time frame, so I sent out a long position for my members that follow the trend, because price is going to retrace back to 1747. We had a really tight stop loss, so I'm still in a buy position all the way up to 1747. So if I just zoom in, you can see that the price will continue up to 1747. It's going to touch, and then I expect price to drop all the way back to 1728. Now, this is my scenario, and this is what I'm waiting for. And you can see that I'm waiting gold to creep up to 1747 and then drop all the way to 1729. Why do I think that price is going to reverse from 1747? Well, I explained 3 reasons. Market imbalance, Fibonacci. If you look left on the chart, there is support and resistance, and also that is the bottom of this ascending bearish flag pattern, which means that the price has to retest before it continues to the downside. So what do you have to do if you miss the move right now, and you know, if you want to sell? I'm going to tell you exactly, so keep watching the video. So when price reaches our target, which is the 1747, bear in mind price could easily spill over a little bit and touch into 1748, but you should be aware of this because we're talking about gold. So what happens if gold, for example, comes back to retest the trend line and then comes back to 1747? And the next thing you want to watch is go down to a lower time frame and watch price action. So if you go down to a lower time frame, this is what you have to look for. You have to look for the candles, and how do they look? Are the candles going to close above the 1747 level, or they're going to close below the 1747 level? There is a big difference. For example, if the H1, M30 and you know all of these candles, or even the M15, if they close above these Fibonacci and the 1747 level, it means that they're going to invalidate. And if you go down to a higher time frame, the candles are, you know, the body of the candle are going to close above these levels, invalidating the sell position. But on a smaller time frame, what you have to do is watch price action. So the kind of market structure you want to see on a smaller time frame is price comes up, taps into the 1747, maybe a little bit higher, and then what you want to see is that an immediate pullback or an immediate rejection. So let's imagine that this is going to be the trend line. So you're going to see, you know, these candles. So in a smaller time frame, whether it's the M5, M15 or M30, you have to monitor this minor trend line, because the price is going to come up to 1747. You're going to see the candles along this trend line. You have to place the trend line below the candles, because this is a minor bullish trend. So we're looking at the candles, and as soon as the candles you know, close below the 1747, and what you have to look for in order to validate the sell, so it's not just selling, setting a sell limit, you have to monitor price action. So for example, if this trend line, I'm just deleting this, so candles are closing you know, just below the 1747 level, reaching our predestined target. But as soon as the candle starts to break the trend line and the market structure, meaning that you know, if this was the previous low, if the candles are closing below the previous low, it's meaning the price action is breaking, or the price is breaking the market structure, and also is breaking the trend line, which means there is a signal for reversal. And on a smaller time frame, it could give us like a head and shoulder or a double top on the 5-minute chart, and that is where you want to enter. That is the perfect confirmation that the price is going to reverse. So once you have these confirmations, price is going to break the trend line, is going to reverse from that level. Then you have another trend line, but that will be fine. If the price comes down all the way to 1736, you know that it's going to drop. All you have to do is wait for another retest, use your Fibonacci, price action, candlesticks, whatever you want to use, or indicators. Wait for another retest of this trend line before you're selling again. So you have two sell opportunities, one at 1747 and the other one if the trend line breaks. Now, this was the bearish scenario, but what happens if my analysis is completely wrong and you start going into drawdown, and what if the price turns into bullish? Well, good news, I'm going to give you an alternative scenario so you don't have to worry about thinking about the contingency plan. Let's imagine for bullish scenario that we can draw this trend line. So if the price keeps coming up, respecting the 1747 and then drops back, but then with the bullish candle breaks above this level, also breaking the previous market structure. So it's breaking the previous high, or actually breaking this high, sorry. So one more pullback here, comes back here. And then all you have to do is follow this trend line and just look for entry opportunities. In entry opportunities, I mean look left on the chart. You have support and resistance. If the price breaks the 1747, and even if it goes a little bit higher to 1748, you know exactly that if the price, all candles close above, just wait for a retracement to the support and resistance, the trend line, and then you can start using the Fibonacci, because the price invalidated the previous price action, and then just look for entry opportunities. That simple as that. Bear in mind, I do send daily setups and charts to all of the members. So if the price for some reason invalidates my setups, or if it does something crazy, or even if it goes into our direction, I give them a shout out that, hey, watch this. This is the new setup. Monitor price action and look for buy or sell opportunities. If you get any value out of the weekly videos, guys, please subscribe to the channel, hit the like button and leave a comment in the video below if you like the weekly videos. I hope you enjoyed this week, and also bear in mind that it's the end of the month, so protect your capital and have a good weekend, guys. This is the Alpha FX.